Thanks for clicking. Canada's inflation rate continued to skyrocket in April, as the cost of groceries and shelter led the way to a 6.8% inflation rate. The continual rise in our inflation rate isn't going to come as a surprise to many, as a recent poll showed that the cost of living is at the top of the minds of most in Ontario, and I would assume elsewhere in Canada as well.
Don't yell at me. I'll yell at you. You don't like it?
Yeah, definitely. This news comes on the heels of a Bloomberg Nanos poll showing that consumer confidence is at its lowest level since the depths of the pandemic, or December 2020, with 39% saying their finances have weakened and more than half thinking it's going to get worse. So what I want to do today is go over the inflation rate, discuss the next step for the Bank of Canada and interest rates, especially in light of the Federal Reserve's recent announcement that they will raise interest rates as high as need be to get inflation under control, and then we'll take a look at what to look for next. The Bank of Canada is set to make its interest rate announcement on June 1st, with some saying that the bank could go as high as a 100 basis points rate hike. I don't think we'll go that high, which we'll get to in a few minutes, but I do think we're in for some increased cost of borrowing over the next few months. We'll obviously have updates on that rate hike announcement on this channel. Make sure you click like and subscribe to get those updates, but for now, let's get into this inflation rate. As mentioned, Canada's inflation rate continued to rise to 6.8% in the month of April, and this is just going to put even more pressure on the Bank of Canada to continue to raise interest rates. There have only been 2 times in the past 50 years where our prime rate was less than our inflation rate. Once in 1975 after the oil shocks, when many argue the central banks were too late coming to the party and allowed inflation to get out of control, and then again very briefly in 2012. And there's good reason why our interest rates are almost always higher than our inflation rate. When money loses value faster in inflation than it can gain in interest, it encourages people to borrow, it encourages people to spend. It contributes to the inflation rate in and of itself. So the idea is when inflation starts to go up, the central banks raise rates fast enough, soon enough, that it tamps down our inflation rate by discouraging people to spend.
Why didn't you tell me this before?
And this already has some arguing that the central banks, the U.S. Federal Reserve and the Bank of Canada, have waited too long to raise interest rates, and now they have to go quickly. Former Bank of Canada Governor David Dodge has said that the Bank of Canada needs to get its act together. It needs to move very quickly on interest rate hikes, as we can't risk a return to the 1970s. Former Federal Reserve Chairman Ben Bernanke, which you'll probably remember from the 2008 financial crisis, has argued that the Fed has waited too long to raise interest rates, and we might be entering into a period of stagflation. A lot of these ex-central bankers seem to be getting very vocal about the inflation rate, but only after it's seemingly got out of control.
Thanks a lot.
But they're not wrong. If a 6.8 inflation rate in Canada and 8.3% in the US was the goal, then everybody did everything right. The war in Ukraine aside, obviously that was unpredictable, though I suspect that the rise in inputs from that war have yet to show up in our inflation rate. So, more to come. So given the 6.8% inflation rate in Canada, I would expect the Bank of Canada to move by at least 50 basis points in its June 1st announcement, and probably another 50 basis points in its July interest rate announcement, for a total of 200 basis points, or 25 basis points higher than we were pre-pandemic. We'll have a policy rate of 2%, my prediction. But it's what happens after those policy rate increases, after we see those 100 basis point increase in our interest rates. It's what happens after that will really define our housing market and our economies for the rest of 2022 and well into 2023. As mentioned, Fed Chief Jerome Powell in the US has already said the Fed will be raising interest rates as high as they need to get inflation under control. And the Bank of Canada, because they have to, usually maintains a very similar policy rate to that of the Federal Reserve. So, with the inflation rates at 8.3% in the US and 6.8% in Canada, it's looking more and more likely like we're going to see a tighter and tighter monetary policy, higher and higher interest rates and cost of borrowing. With all of that said though, as we've talked about in another video, the Bank of Canada just recently announced that they would consider a pause maybe a reversal in interest rate hikes if the housing market begins to reverse too quickly. With economists already worrying that we could be in for at least a 10 to 20% market correction and fears of a recession in both Canada and the US growing, the downside of these interest rate hikes are definitely weighing on the minds of the central banks, the US Federal Reserve and the Bank of Canada. So with Canada's inflation rate at 6.8%, and we're already starting to see major cracks in the real estate market, the Bank of Canada could very well be faced with a very difficult choice in the coming months and years ahead. Do they continue to prop up the housing market? Do they stop the real estate market from crashing? Or do they continue to get inflation under control? We said from the very beginning this is going to be a very tough needle to thread, and the central banks very well might not be able to have their cake and eat it too. They might not be able to stop the housing market from crashing while at the same time getting the inflation rate out of control. The thing with cheap money is that it's addictive, and when an economy gets used to running on cheap money, when you take it away, all sorts of chaos can and does ensue. We'll obviously have updates out on the effects of these interest rate hikes on the real estate market and on Canada's economy. If you want to get those updates, make sure you click like and subscribe, and thanks so much for watching.